Welcome! Today we're diving into something really fascinating. A quiet but absolutely massive transformation happening deep inside India's financial system. It's a fundamental rewiring that's really going to decide how the country funds its future.
We hear about India's economic growth all the time, right? But what's actually happening under the hood? What's the machinery that's really powering that engine? Well, the answer, it turns out, is a complete rewiring of the country's financial plumbing.
Okay, so let's get right into it. The most crucial point is this. For decades, if a big company wanted to expand, it went to a bank. That was the main game in town. But what we're seeing right now is this deliberate pivot away from that old model. We're moving to a much more dynamic, much more resilient system that's built on capital markets.
And look, this isn't just some market trend. This is a profound structural change. It's about building a financial system that's more diversified, more resilient, and frankly, just better equipped to handle the massive funding that a fast-growing economy needs. So, how did this even become possible? Well, it all starts with the foundation.
Now here's the paradox. This big move away from relying on banks is only possible because India's banking sector is probably the healthiest it has been in decades. It's like you've got to strengthen the old foundation before you can build a brand new skyscraper right next to it.
First things first, the banks cleaned up their books. The gross non-performing asset ratio, which is basically just the percentage of bad loans, has dropped to just 2.2%. That's a low we haven't seen in decades. It means banks are no longer getting bogged down by a legacy of old, soured loans.
And this number right here, this really shows you their strength. Banks now have a capital adequacy ratio of 17.2%. To put it simply, that is a massive safety cushion. It's a buffer that lets them absorb potential shocks without cracking, and that provides incredible stability to the entire system.
So, with the banks providing this rock-solid foundation, the big corporations have started to look elsewhere for their growth capital. And guess what? They found a powerful new engine, the capital markets.
What's so interesting here is just how clear the shift is. The old model was simple. You go to the bank. The new model, it's the sophisticated mix. Companies are now raising money through corporate bonds, they're issuing shares to the public with IPOs, and they're using their own profits to fund expansion. They've diversified their risk.
So, you might be wondering, has this shift away from banks starved companies of cash? No way! Absolutely not! In fact, the total opposite has happened. The flow of financial resources to the commercial sector just exploded, jumping by almost 45% in just the first 9 months of the last fiscal year. The system is providing more capital, not less.
And you can see this most clearly in the IPO market. Indian companies are tapping the public markets for capital at a world-leading pace. And this isn't just about fundraising. It's about bringing a whole new generation of companies into the formal market, creating wealth and transparency along the way.
But hold on, where is all this money for the market activity coming from? Well, for the first time, the biggest, most formidable force isn't overseas capital. It's coming from right here at home.
Get this, an incredible 12 crore, that's 120 million unique retail investors are now active in the market. This is a historic surge in participation. We're seeing household savings structurally shift from traditional things like bank deposits into equities, and that is fundamentally changing the entire character of the Indian market.
And that has led to a huge shift in the balance of power. For the first time ever, the ownership stake of domestic institutional investors, we're talking mutual funds, insurance companies, all fueled by our own domestic savings, has actually surpassed that of foreign institutional investors. This domestic depth is acting as a powerful stabilizer for the market.
And as the economic survey itself puts it, these domestic players provide a strong counterbalancing role. In the past, if foreign investors decided to pull money out, the market would often tank. But now, there's this deep pool of domestic capital that acts as a cushion, making the market far less vulnerable to global whims and volatility.
Okay, so we have a healthy banking system, booming capital markets, and a powerful domestic investor base. Why does this all matter? What's the grand strategy behind all of this? Well, it comes down to one of the most fundamental challenges for any emerging economy: the cost of capital.
Let's break this down for a second. The argument is that India's historically high cost of capital is a structural problem. See, when a country consistently buys more from the world than it sells, it runs a deficit. And it basically has to borrow foreign savings to pay its bills. That borrowing always comes with a risk premium, which keeps capital expensive. So to make capital permanently cheaper, India has to flip that entire equation.
And this just brilliantly illustrates the long-term game plan. You start by deepening your own financial markets, exactly what we've been talking about. Then you use that deep domestic pool of capital to fuel a manufacturing and export boom. This, in turn, helps the country generate national surpluses, finally breaking that old reliance on foreign savings. It's this incredible virtuous cycle, and the whole point is to permanently lower the cost of capital for everyone. And that is the real prize. Because cheaper capital means cheaper loans for businesses to expand, it means more funding for massive infrastructure projects, and ultimately a more powerful engine for long-term growth.
So, what we're really witnessing is the creation of a financial system that's just more robust, more diversified, and increasingly powered by its own citizens. This isn't just a story about stocks and bonds, it's about building the financial infrastructure for India's entire next chapter of growth. Which really leaves us with one final, powerful question to think about.